Welcome to the second episode of Crypto Markets, Wyckoff in Action. I am Alessio Rutuliano, and today we will discuss the crypto markets using the Wyckoff principles. As usual, stop the video and read the disclaimer. Roman, how are you doing today?
Yeah, doing really well, Alessio. Looking forward to our discussion about the crypto world.
So, as usual, let's start with the big picture. On the bottom chart, we see the S&P. The last reaction is still in line with the uptrend, but look how many closes we have erased in just 3 days of selling. This reaction is a change of behavior that suggests that supply has come to the market and we need to absorb that supply in order to continue to the upside. Now look at the volume on the last reaction of the S&P. As we study in the Wyckoff trading course, when we see an increase of volume on a down bar, that volume suggests also the presence of buyers. And the oversold condition of the trend looks like a natural point for buyers to step in. So we can see buy activity on this oversold level. Now the most important question is, what's the quality of this buying? Who's buying here? Weak hands or strong hands? So when the picture is not complete yet, it's very important to think in terms of scenarios and tactics. And this is what we will do today. So we see a very similar price action on Bitcoin 2. Look at that quick reaction that we have seen live in the previous episode. Demand fades on the top. Then all of a sudden, we see a reaction with high volatility that brings us back to the oversold line. And now we're just on the top of the previous resistance. Now let's look at the last 6 days of price action. Volume is decreasing. Volatility is contracting. We see many small bars with demand tails. Supply is temporarily exhausted, and I expect to see at least an attempt to come back to the area where selling came in. If this attempt shows no lift and no ability to commit above significant supply levels, we could retest the lows. But now let's discuss the current environment more in depth, looking at the intraday charts. And before that, Roman, your thoughts?
Well, really good analysis, Alessio. I like it. I like this comparison of the S&P 500 and the Bitcoin. So definitely those two changes of behavior are very similar to what S&P has. And I would totally agree. Right now, we have stopped. And after the stop in action at the level of the support, we're expecting some kind of rally. So the quality of the rally, is very important. I would be thinking maybe an attempt to go to this place right here, overcoming this high. Obviously, these two bars now become the most significant bars for the resistance area. If the rally fails, does not necessarily go in a meaningful way above this most recent short-term trading range, and if it fails like this will be a big indication that we're probably going to have a retest of this action like this. It still could have a more meaningful reaction. We could have a second leg down. So the current rally, how it's going to unfold, is going to determine what kind of next price action we're going to have. All right, let's go to the next one. Okay.
So I call this slide anatomy of a selling wave. And the point here is that there's always a high correlation between the stock market and crypto markets. And I think this is a very important chart, especially for intraday traders, because in these market conditions, intraday traders are looking for some kind of counter rally. Last week in our previous episode, we have shown many strategies, both to the long side and short side on the intraday. And the current environment requires a kind of flexible attitude. So prepare your charts, look for a setup, but if the trade fails, do not fight the market. So I hope that this kind of analysis will help traders to keep in mind that the context of the market is always your starting point. So we see here 4 charts. The Nasdaq, which is the index where we have seen a lot of selling in the last week. And then 3 crypto charts. The Uniswap futures, that's an index of a very speculative crypto in the DeFi sector. Then we see DOT or Polkadot, an asset that we have discussed in our previous episode. And then Binance Coin, which is an exchange token, which is showing a lot of strength lately. Now, look how the selling wave is visible early on the Uniswap at point 1. So the most speculative area of crypto at the moment is more sensitive to selling pressure in the market. And it's basically anticipating the selling that we have seen on the Nasdaq. And this is a very important concept. At point 2, the Nasdaq shows a very important down bar that warns us buy activity is deteriorating. This is very significant selling activity that we see there. At point 2, on the dot, what we see? The asset is holding very well. There is a potential spring setup, but what kind of lift we see after the penetration of the support? No lift at all. Why? Because the market is still in a downtrend. And in a downtrend, we can see more and more selling waves. So first, they sell what they want. In this case, the Uniswap that had a massive bull run in just a few weeks. And we were extremely in overbought conditions. But then they sell what they can. So this basic principles is very important when you trade cryptos on the intraday because market conditions are very important. What do you see at point 4? Cryptos make a higher low compared to the Nasdaq, and Binance Coin in the exchange sector shows some comparative strength on the bottom, lower low on low supply signature, and then look at the big recovery, followed by testing on a rising scale. And there is no doubt that Binance Coin is showing a lot of strength, but now we are close to the resistance level. So if we fail here, it will be extremely important to look at what kind of reaction we will have. A good tactic could be just wait for price committing above the resistance and then backing up. What do you think, Roman?
Well, again, a very interesting concept of correlation between the market and the crypto assets. So I really like the idea that the speculative asset shows us a change of behavior first. That's an extremely important concept, as you said. And then, the Nasdaq is just basically saying, okay, we're going to fail. And then, much stronger assets are failing, like the Polkadot. And I also like how the comparative strength is being exhibited here at point number 4 for the Binance coin. Yes, a little bit laborious move to the upside right here into the area of resistance. So the question is here, would we be reversing to the downside again if we're going to have some kind of move to the downside? I think the key for NASDAQ, if we're comparing everything to NASDAQ here, is this latest bar where the selling has occurred and some demand came in. Would we overcome this or not? If yes, then that's going to probably start lifting other assets as well. So kind of the same levels here for the Uniswap, same levels here for the DOT, and then, as you said, this resistance point right here. All right. Let's go to the next one.
Here we see the main crypto sector. So basically the DeFi index, these are small caps, but there's a lot of momentum in these assets. So we see some kind of recovery, and the same principle that we have seen in the previous chart can be applied here. Basically, what's the most important level here? I think that it's very important. Now we are just right on the resistance, on local resistance, and we want to see what kind of reaction we will have here. This recovery is very important on the DeFi index, especially on the DeFi index. I like this recovery compared to the recovery that we see on Bitcoin. And we have to keep in mind that this asset class is like the equivalent of small caps in the stock market. So when you see some kind of strong recovery in small caps, that could be really beneficial for the whole crypto market. But we have to see. We have to see if we are able to commit above this very significant level of resistance. Then we see Bitcoin, which is lagging. And as we have previously said, we see some kind of recovery here. Volume is decreasing. So this looks like a shakeout action on Bitcoin. And we need to see what kind of commitment we will have above the local high. And that's really, really important. Then we have the mid-cap index. Same story, but we see some kind of weakness, because comparative weakness, because we see a lower low instead of a lower high instead of a higher high compared to the DeFi index, which was leading the market. And last but not least, the exchange token index perpetual futures. It is like the strongest index right now. Look at what beautiful recovery we have right now. Even here, it's very important to see what kind of commitment we will have about the resistance. And for now, we see a couple of supply tails that could be followed by a reversal. So we have to be very, very cautious on this level. What do you think, Roman?
Yeah, these do not necessarily look extremely bullish at this point. And, you know, this whole decline kind of reminds me more of a sign of weakness than the potential shakeout, just because of how extensive, aggressive, with a lot of supply, you know, those selling has been. Having said this, I think that the message that Alessio has is to look at the resistance, the current resistance that was created by the structure. And we kind of seen those points of the resistance right here, right here, right here, and then right here. And all of these formations have, you know, similarities, the way how the reaction has happened, and similarities the way how the price is trying to recover. And we kind of seen that in all of the cases, the price goes to the resistance point, and we are at the moment of truth. Are we going to be able to overcome this resistance or not? So that's the main point right now to watch for in all of these four assets, and to see if we're going to recover from here. If we are, then you know, definitely the bullish case has some merit. If not, if we're going to fail, then there might be a continuation of the down move. Another structural idea that I kind of have here is we would look into this area and into this structure right here, and we would say that this was a distributional type of formation. Then we're having a change of behavior as a big wave to the downside. That could conclude the development of the boundaries for a much larger trading range. So one of the possibilities is that we could just swing here up and down if this point of the resistance will be overcome. If not, then most likely we're just gonna consolidate and continue to the downside. So I would say that at this point, Alessio, I would be just like waiting and seeing, what's going to happen next, and trying to identify what kind of commitments over resistance we're going to have.
So the message basically is look at the resistance because it's the most important level right now. And the same story of Bitcoin, basically.
Well,
Because
the resistance could be defined in so many ways, right? I think for us, when we, tape read, we want to take this last bar. That's the most important bar for us. Look at the volume signature here. Actually, this belongs to this bar. But this was the last, significant bar to the downside. So here's that level, 10, 750, 11,000. These are the levels that we would want, the price to overcome. And I still do not see, and I wonder, Alicia, what you think about this. The rallies that we have here in the Bitcoin, they're not that great. They're just, somewhat mediocre. What do you think?
yes, we see a lot of supply is decreasing, no doubt. But the point is, where is the demand? Where is demand? Because when we judge a rally, basically want to see good volume or ease of movement. And ease of movement is defined by the level of commitments. What kind of commitment we have in this case? The level of resistance still have to be broken. So for now, we are like in no man's land. This is what I think.
Yeah, it's going to be important what's going to happen right here. Again, in a way, kind of like almost a binary event, either up or either down. And right now, no lift, no demand. So the bias right now, the short-term bias, is to the downside. We have lower highs, lower lows. So therefore, our first commitment to the bias is going to be to the downside, and we will be looking the confirmation of that continuation. But if this happens, then we might, change our opinion on the bias.
Yes, I think the point here is to be flexible with our interpretation and just use our tactics. Same story on shitcoin index. This is basically the small cap index in the crypto language. And what we see here, we see a huge down move followed by a decreasing supply signature. We see a good volume bar, which is a spring, potential spring, then a test as a higher low, and look at the volume of that higher low. Volume is locally increasing, it's followed by a test, and then we have this very good rally on low demand. The point is that, as we have said before, low demand can be good, but we have to see some kind of commitment above the resistance level. So now we are right on the resistance. If we see some kind of failure here, we should be really, really cautious. What do you think, Roman?
Yeah, a much more pronounced decline than in other assets. Quite a lot of supply coming in. Conditions before suggest deterioration of the demand signature as well. So there is quite a lot of bearishness here, short term. And I think only because selling has subsided, we're having this more or less technical rally when demand is diminishing. And again, we are making the same point. So guys, for those of you who are watching this recording, I think for this week, the main idea is the resistance. How does the price behave around the resistance? Can we overcome it, or are we going to reverse? All right.
And we have seen some kind of comparative strength in the exchange sector. So let's look at a very important crypto asset in this sector. This is Leo. Let's look at this huge formation. This chart reminds me a lot of the comparative analysis that we can do between the Russell index and Nasdaq, because this index is lagging, was lagging basically, but look right now on the potential major sign of strength that we have on the right side of the chart. we do not see a very deep selling right now. So the asset is holding. It was lagging, now it's holding at this level. So the point is that we want to see some kind of commitment above the local high and some kind of rotation. So we have to look for the relative strength in the market to see that the exchange sector is really, really starting to outperform other assets that were very speculative. So this is a very interesting chart, but we still have to see to look for some kind of commitment above the resistance. But I think that for the long term, we should keep an eye on this.
Yeah, very interesting chart. Established uptrend, higher highs, higher lows. A good consolidation here. I would probably prefer to see more of the diminished volatility after this reaction. So we kind of starting to see that. Also, this support line might become, very important. But in a lot of cases, when we might have maybe like, phase B, that type of structure, there might be some failure into the ultimate phase C low, could be a high low, and then resumption of the trend. So if we are, tactics are very simple here. Either we're going to fail here, or we're just going to continue. And I think that we just, have to play either a continuation or a reverse signal. And a failed signal in technical analysis actually is one of the strongest signals that we could potentially have. So therefore, just be on the lookout. But yeah, very interesting in terms of how tactically this particular asset is going to behave.
And this is a very special chart because it's a case study. On the top, we see a very popular cryptocurrency. This is Chainlink. And Roman, what kind of cryptocurrency we have on the bottom chart?
Well, I recognize the chart because, I've just studied this chart so many times. So this is Apple.
Yeah.
And, you could recognize, first of all, Apple from this area right here. This is where in 96 Steve Jobs came back, and then a major sign of strength has happened. And then the market took down the leadership to the support level, still as a high low, consolidated for multiple years into 2003 low, and then started its rise into the stopping action that went into a large reaccumulation in 2008-2009 crisis. So a very, very familiar chart. And I see that, Alessia, there are quite a lot of similarities here with the Chainlink.
Also, we have to think that Chainlink is one of the leadership asset of the crypto market. So it's very important to look at the long-term formation. So basically, what we want to do right now with Chainlink, we are in a very special consolidation, and I think that we should always look for confirmation to the upside before jumping on an asset. This is what we study in the Wyckoff trading course. Look for confirmation. Just not try to pick the bottom. But this could be a very, very important low in the long-term view of the chart. And I think that another important strategy would be to wait for that kind of resolution that I've drawn on the chart, and then count for, basically we could have a confirming count right there, and then project the count of the whole base. This is basically, you can study the same principles in the webinar of about the PNF charting by Bruce and Roman.
Yeah,
so
very interesting idea here, and very interesting analog, the way how the price structure unfolded after this initial rise. And obviously this is monthly chart, and this
Yeah.
is 4-hour probably chart or a daily chart. So therefore, everything happens so fast in the crypto world. But the behavior is the same. So again, the main idea, as Alisa has mentioned, is to see if we have a confirmation. Does this pattern holds? If it does, then we would be expecting a continuation here, and obviously we want to participate. Very interesting case study, Alicia.
This was a daily chart. So now let's look at the intraday chart for hour. And the point is that when we look at this chart, we immediately think of a downtrend. But the point is that we have seen how many times very strong momentum asset have this kind of hypodermics followed by a very slow, then sloping consolidation. So this is a 50% correction is not so much, but this could be very prolonged formation. So the point is that we want to follow this chart next weeks, next months, and look for what kind of recovery we will see here. Roman, your thoughts on this chart?
I like this chart, in the context of what we've seen before, the long-term chart. Obviously, the correction is somewhat healthy, only just 50%, even though it seems so much. But if it holds here at 10, then I think, there is a lot of viability for the continuation of the uptrend. I like how the supply and the volume signature increase here at the end, suggesting that specifically on this bar, there is some demand behind it. And now we're having a higher low test on the diminished supply signature. So that's constructive. I wonder if we're going to have some kind of, like with Apple during 2008, 2009 bottom information, if we're going to have some kind of, more testing to be done, and then we're going to go up. So that's the only question that I have. And obviously just holding above 10, that's the key.
Yes, and we always have to keep in mind that this is a 4-hour chart. So basically, when we go back to the daily, this formation could be very tiring for traders. But this is the beauty of crypto. This market is so fast, but when we are in a consolidation mode, we have the opportunity also to think of long formation and anticipate big movement.
All right. And that's it for today. Alessio, that was a great session. Thank you so much. Your concluding thoughts?
To be here. I was very pleased to be here and receive a lot of comments. And feel free to comment on YouTube, on our crypto forum on wyckoffanalytics.com. And that's all for today.
Thank you and bye-bye.